So when I first evaluated eBay stock, I told investors, don't expect this company to grow revenue very significantly. Low to mid single digit revenue growth for the longer term is what you should expect reasonably from eBay. And that's pretty much what the company has delivered over the previous decade, increasing its revenue from 8.6 billion in 2015 to 10.5 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of about 2.1%. eBay experienced volatility during the pandemic. Of course, it benefited as people were shopping online more frequently. And one of the things I really like about eBay is that it's an asset-light business model. It doesn't invest in any of the inventory that's sold on the platform. That's all by third parties. Also, it doesn't deal with fulfillment and logistics and warehousing, those capital-intensive parts of e-commerce. It allows its sellers and buyers to deal with that, and it excludes itself from those services. All eBay does is provide the platform to bring together buyers and sellers, and it takes a fee for every transaction that happens on the platform. And by the way, that fee has been increasing meaningfully. That fee was less than 10%, closer to 8% a few years ago, and it's now well above 13%, that transaction fee that eBay charges. Now, that might be annoying some sellers and buyers on the platform, but there is little that buyers and sellers can do because everyone else is also increasing fees. Wherever you're selling, if you're a seller or a buyer, you'll notice that fees are going up across the board. So now let me share with you my updated discounted cash flow valuation for eBay. I now calculate an intrinsic value for this business at $106. Compared to the current market price of $91, the stock still looks undervalued even after applying a margin of safety. So even though the stock has increased by as much as it has increased so far in 2025, it still looks undervalued because the increase is coming on the back of improved performance, improved revenue and profit and cash flow for the company. And that's what's boosting the share price, and that's what's boosting the fair value of this business. Even when I look at the valuation on a forward price to operating cash flow basis, the stock still looks cheap at a forward OCF, price to OCF of 13. So to update my recommendation for eBay stock, today I reiterated my buy rating and letting everyone know that I still like the stock. The valuation is still attractive, even though the price has increased by so much. For me, it's been justified by an increase in performance. Click the link below to watch the full video.